The US dollar has been the dominant global currency for many years, but now there are growing signs that its position of power may be slipping. Brazil and China recently announced plans to stop using the US dollar in their trade transactions, and Russia is aggressively stockpiling gold in a bid to create an alternative financial system. The rise of these two economic powers could spell disaster for the US dollar, with gold taking center stage as the new global currency. This shift could have far-reaching consequences, not only for America's economy, but also for those of its allies around the world. In this video, we will examine how China and Russia are challenging America's financial dominance and what this could mean for your finances. We will also discuss why gold may be the future of global finance and explore some creative ways to protect yourself from dramatic changes in currency value. The future of the US dollar is uncertain as its value continues to weaken. This can be attributed to the increasing influence of emerging economies such as China, Russia, and India. In recent months, these countries have all begun to move away from the US dollar as a form of payment for international trade. These nations have instead begun to turn towards gold-backed currencies for international transactions. Russia, for instance, recently announced its intentions to launch a gold-backed cryptocurrency in response to the weakening dollar. China, on the other hand, is looking into introducing a digital currency backed by gold reserves. It remains to be seen what effect these moves will have on the global economy and the strength of the US dollar. However, it is certainly concerning that major global powers are increasingly turning away from traditional forms of currency and embracing alternative forms of payment. This could spell trouble for countries like the United States, which depend heavily on the US dollar for international trade and financial transactions. The US dollar has been losing its global stronghold on the world's finances as countries like China and Russia have agreed to stop using the USD for trade. This is due to the increased risk flows that dominate the current financial markets, with many investors opting for a safer option like gold. China and Russia have turned their attention to gold as an alternative form of currency, which could be detrimental to the future of the US dollar. The two countries have been stockpiling gold in recent years. This moves away from traditional currencies, such as the USD and Euro, could potentially signal a shift in favor of gold-backed currency. The weakening of the US dollar further impacts countries that accept it as a trade currency. Brazil has already made moves to adopt Russia and China's stance against the USD, teaming up with both nations to reduce their reliance on dollar-based trade transactions, paving the way for gold-backed currency instead. All these factors signal an uncertain future for the US dollar, as more countries begin to look elsewhere for a more stable form of financing. The US dollar has been in a state of weakening for some time now, but the next big action could be triggered by the PCE inflation data from the US. When the data is released, investors could be spooked and begin to look beyond the US dollar as a safe haven currency as they look to protect their wealth. China and Russia have both moved away from using the US dollar for trade with Brazil recently, putting further pressure on the currency. This move has been mirrored by other countries who are nervous about America's continuing economic woes. There is also speculation that China and Russia could kill off the US dollar completely in favor of gold. This move would be seen as a sound fiscal decision on both countries' part, allowing them to retain their wealth in a more stable form than paper money. It remains to be seen whether this will happen, but it is certainly something worth keeping an eye on if you want to stay ahead of events as they unfold. The US dollar, USD, is currently the world's reserve currency, but this may soon change. China and Russia have made moves to move away from the dollar in recent years, and now they're threatening to use gold instead. Here's how China and Russia will be able to kill the USD by using gold. China and Russia have both been diversifying their investments away from US treasuries and into gold reserves in order to protect themselves from any potential US economic collapse in the near future. As of February 2019, China owns over 1,800 tons of gold in its reserves, the sixth largest amount in the world, while Russia holds just under 2,000 tons of gold, the fifth largest amount worldwide. Rather than relying solely on the US dollar as a reserve currency, both countries are now positioning gold as an alternative global reserve asset, allowing them to hedge against future financial risks by diversifying their investments into different assets, including gold, euros, and even cryptocurrencies like Bitcoin, BTC. In addition, both countries are leveraging their large gold reserves in order to provide oil payments that are backed by gold rather than by US dollars. thereby making them less susceptible to economic fluctuations or shocks caused by changes in currency exchange rates or geopolitical tensions between countries. The trend of countries moving away from the US dollar is a worrying sign for the global economy. But what would happen if China and Russia succeeded in replacing the US dollar? The US dollar has been the global reserve currency since 1944, when it replaced gold as the preferred form of international exchange. The potential loss of this status could lead to increased inflation and higher prices in goods and services. A shift away from the US dollar would result in a disruption of global trading, as different currencies will have to be converted according to new exchange rates. This could lead to higher costs for businesses that rely on international trade. The US dollar's role as the global reserve currency has been under threat for some time, with countries like China and Russia joining forces to potentially phase it out of their financial systems. While the idea of a new global currency has been floated in recent years, many believe that gold could be the bridge between fiat money and a more sustainable system. When it comes to gold, there are several advantages that make it an ideal candidate to replace the US dollar. Not only is gold a valuable asset that can be used in international trade, but its value remains stable over time and is not subject to inflation. Furthermore, gold is extremely liquid, meaning it can be quickly converted into euros or other currencies as needed. Lastly, gold is an international currency and serves as a universal form of exchange among countries. This means that countries do not need to worry about fluctuations in exchange rates or other financial issues when trading with each other. In fact, China has already started buying up large amounts of gold in order to diversify its reserves away from the US dollar. Ultimately, gold could be the perfect solution for replacing the US dollar as a global reserve currency, if all countries agree on its use as an alternative form of money. Whether or not this happens remains to be seen. But one thing is clear: gold will likely play an important role in managing global finances for years to come. The future of the global economy hangs in the balance as we watch China and Russia challenge the status quo. But what could be the ultimate effects of challenging the US dollar? It's no secret that nations such as Russia and China have been buying gold, and it's been speculated they are doing so to build a gold-backed system which would replace the US dollar. A shift away from the US dollar could cause serious economic disruption, as many countries rely on it for their international transactions. Another likely effect of a shift away from USD would be an increase in inflation or deflation rates. Since USD is often used as a store of value, if it were to weaken, there could be an increase in inflation, while deflation could occur if currencies are suddenly devalued due to lack of confidence in their stability. Finally, a change away from USD could have significant effects on global trade. Many countries rely on USD for their foreign exchange reserves, and removing this would mean those nations need to find other currencies or commodities to use for international transactions. This could lead to increased trade costs and slower global economic growth. As the world's most powerful nation, the United States' economic policies are closely watched by the rest of the world. With the US dollar waning in value, it's now more important than ever to be aware of how China and Russia might have an effect on the global economy. The rise in gold prices and the increasing willingness of the two countries to stop using the US dollar in their bilateral trade could mean the end of the US dollar's dominance. As the world continues to grapple with its global economic recovery, the effects of China and Russia's actions are sure to be felt by everyone. It's important to remain informed and understand the potential effects of these changes, so that we can be better prepared for what lies ahead. Kindly let us know your opinions in the comments section below. Don't hesitate to like this video and subscribe to our channel to see more videos like this.